What's up guys, it's Nathan here. Breaking news, ANZ has revealed its housing price forecast predicting stability and moderate growth in 2024. The unexpected upturn in the market is fueled by better auction clearance rates and robust population growth. Join us as we delve into what's driving the change and what it means for you. Recent developments in the housing market have led ANZ to revise their housing market forecast. ANZ now anticipates that capital city housing prices will remain unchanged this year and see moderate growth in 2024. The past year saw a 9% decline in capital city housing prices, and the recent upturn has been unexpected. ANZ initially believed that the steep decrease in interest rates, both actual and projected, would continue to impact house prices throughout 2023, causing prices to fall 10% over the year. However, it appears that most of the weakness is now behind us. The low supply and stronger than expected demand have seemingly overshadowed mortgage rates in recent months. New listings are 20% below their 5-year average, and the total listings are at their lowest since 2010. This is occurring whilst immigration is booming after 2020 and 2021 slump when international borders were closed. The pandemic had already driven housing demand significantly higher, and with the average number of people per household falling to an all-time low on top of that. And if you find value in this video, please consider hitting that subscribe button as it really helps out the channel, and a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. Auction clearance rates demonstrate the tightness of the market. Over the past few months, these rates have risen to the mid-60s, consistent with annualized house price gains, approximately 10%. Additionally, the Reserve Bank of Australia cash rate hikes haven't entirely translated to mortgage rates. Fierce competition amongst banks have resulted in the average mortgage rates on new loans increasing nearly 50 basis points less than the actual cash rate. Sentiment plays a role here too. The Reserve Bank's decision to pause rate hike cycle in April likely fostered some optimism. The most recent Melbourne Institute Consumer Confidence Survey revealed a significant increase in house price expectations. ANZ has previously projected that strong household income growth and substantial savings buffer would soften the drop in house prices. These factors may be providing even more support than ANZ initially anticipated. The early recovery in housing prices indicates that the household sector remains resilient despite challenges from higher inflation and higher interest rates. Given the shallower than expected decline in housing, ANZ now believe that any recovery will be gradual and modest. ANZ have revised their forecast and predict a 2% rise in house prices for 2023, down from their earlier estimate, which was 4%. In the 3 months leading to March, Sydney house prices increased by 1.3%, marking the first quarterly rise in a year and the most significant gain since 2021, according to Domain data. House prices in the combined capital cities are also experiencing their first annual increase during the first quarter. Record migration, low listings, and tight rental markets have collectively ignited the recovery in the housing market despite rising interest rates. This has prompted major banks such as Westpac and ANZ, as we talked about earlier, to revise their forecast. ANZ's senior economist Felicity Emmett expressed surprise at the recent upturn in capital city prices. She cites that low supply levels and stronger than expected demand are the key drivers, which is overpowering the influence of higher mortgage rates in recent months. ANZ predicts that Sydney house prices will actually rise 2% this year, while Perth is expected to see a 1% increase. Melbourne's housing market is forecast to remain flat, and Brisbane is projected to decline by 2%, Adelaide by 6%, Hobart by 8%, Darwin by 4%, and Canberra by 5%. By the end of 2024, house prices in Sydney, Melbourne, Canberra, and Hobart are expected to rise by 2%. Brisbane by 5%, Perth by 4%, and Darwin by 3%. On the national scale, house prices are predicted to increase by 3%, although Adelaide is expected to experience a 1% drop. According to Ms. Emmett, the less severe decline in housing prices suggests a slow and modest recovery. Last November, ANZ had predicted that house prices in the combined capital cities would fall 11% this year, with Sydney experiencing an 8% drop, Melbourne a 9% decline, and Brisbane a 10% decrease. Nicola Powell, Domain's chief of Research and Economics agrees that the positive factors contributing to the earlier than anticipated turnaround in the housing market will continue to support property values. However, she also believes that price increases will be limited. Dr. Powell noted that Sydney house prices likely bottomed out at the end of the previous year, and prices are now recovering in certain areas, particularly at premium locations. Although the recent increase in house prices is moderate compared to the 2.8% historic average for quarterly growth, the sudden price boom in Sydney is not expected. Dr. Powell suggests that a significant catalyst or spark, such as a rate cut, would be needed for a substantial increase in prices to occur. Until then, a more moderate pace of price growth is anticipated. The premium end of Sydney's housing market, such as the eastern suburbs, the city, and inner south, have led to the recovery, with prices surging by 6.9% and 7.4% respectively. Dr. Powell notes that this is the second consecutive quarter of price growth increase in these premium locations, and the growth is now rippling to the outer areas. The pullback from sellers has been greater from buyers, which has helped stabilize and fuel price rises. And remember to like, share, and subscribe to stay informed with all things property and finance. House prices in Adelaide and Perth have also rebounded, rising by 0.4% and 1.2% respectively. Meanwhile, Melbourne and Brisbane have stabilized, with values falling by 0.5% and 0.1% respectively. In contrast, Canberra, Hobart, and Darwin have experienced sharp declines in the March quarter, dropping by 2.5%, 2.9%, and 3.1%. Dr. Powell suggests that stronger price growth could be seen towards the end of the year in markets like Sydney, and this momentum is likely to be carried through to 2024. The premium end of the market will continue to lead the way in terms of the recovery, and although there's no sudden price boom expected, the market appears to be stabilizing and is exhibiting modest growth. As we see the housing market showing signs of resilience and recovery, ANZ have revised their forecast for stability and modest growth, with key factors such as low supply, strong demand, and booming immigration are driving this change. While no sudden price boom is anticipated, the market's momentum is expected to carry through to 2024. Did you know here at Hunter Galloway, we get mortgages approved and there's no cost for our service? We're a mortgage broker and deal with people Australia-wide. So if you're looking to buy your first home, get into the market, upgrade, downgrade, or even buy an investment property, we can help. Give us a call on 1300 088 065 or visit our website huntergalloway.com.au, where you can fill in a contact form. We'd be happy to help. Guys, as always, thanks for watching. Leave your comments below. Where do you see the market heading in 2023?